Well, ladies and gentlemen, it is time to get down to business, baby. AMC stock, let's talk about it. Cost of borrow rates continue to climb today. Markets are freaking out a little bit more. S&P 500 down about 1%. NASDAQ down about 1.5%. This could wrap up to be a green day or a very red day. We shall see, but we're going to talk about everything you guys need to know regarding AMC stock. We're going to talk about what is happening today in the markets as well, but in the next video that comes out at 4 p.m., we will go over in more depth what is affecting the markets, how we're going to go about the next couple of weeks, what potentially could happen with the next Fed meeting, because things are going to get a little bit dicey, but AMC stock is looking beautiful as always. So let's get into all of this key information. Hit that like button and subscribe to the channel. Why? Because it is free 99 and you can help grow the community just by doing that, and aka maybe help out your position a little bit more in due time, depending on how many people we can bring to the community. Nonetheless, let's dive into this video. So AMC stock for the day, down about 1.64%. Now, today is a very weird day. The start of the day was pretty bullish. AMC stock was one of two stocks that was green at one point today. The only other stock is a dividend healthcare stock, which is AbbVie. AMC was green, now down a little bit, but still doing much better than most other stocks that I even own in my portfolio. Down about 1.57% here today, but it's giving back a slight move from what we have seen over the last two trading days, or 3 trading days now, rallying 15% last Thursday and then 1.24% on Friday. So we're giving back basically that gain from Friday, but nonetheless, we're sitting in a very interesting position on a technical basis. We are above the 50-day moving average. We broke out above the descending level of resistance. Now we're in this weird area here where we are trying to break out above 15. If we cannot, if the markets take over and everything goes down like the goddamn Titanic, then you're probably coming back down to the 50-day moving average, and that is something to be mindful of. I don't think it's going to happen, but it is a very real possibility if the Fed does start to get a little bit carried away. If markets start to expect a 1% rate hike, like we're kind of starting to expect. So you guys definitely want to stay tuned for that one. And that video will be coming out at 4 p.m. like I said. But the biggest thing that is really happening today, or two big things, is Europe is on high alert as Russia temporarily halts gas flows via major pipeline. Operator Nord Stream AG confirmed the maintenance work, which is scheduled to run from Monday through July 21st, got underway as planned on Monday morning. Russian gas flows to Germany are expected to drop to 0 later in the day. Klaus Müller, the head of Germany's energy regulator, believes the Kremlin may continue to throttle Europe's energy supplies beyond the scheduled end of the maintenance work. So some people are saying, hey, if this gas does not come back online to Germany and Europe, well, they're going to be in a bad situation in a very short amount of time. 10 days now. You would think they would be more prepared for this, but indeed they are not. So you could be looking at a very, very aggressive move up in energy prices over in Europe, and that is going to pretty much clap all of Europe if that happens. So we got about 10 days here. If not, we're clapped. Energy prices would do something parabolic you've never seen them do. Like, you don't even want to think about it. So we have that potentially in the next 10 days. So, you know, for good reasons, markets are a little bit fearful. But the biggest thing that is actually affecting the markets today is UUP. This stands for the US dollar, specifically Invesco DB US dollar bullish. Now, when this thing goes up, typically means people are fearful in the world because Forex is pegged to the US dollar, right? Foreign exchange. So when the US dollar is going up, that means global currencies are going down. People are looking for safety in the US dollar. This is as high as we were during the COVID crash. So imagine the fear of that time. People thought the stock market was never coming back. People thought, a good portion of businesses were going to go bankrupt, so on and so forth. You guys might remember that. If you were in the investment world, it's something you will not forget. Well, we hit a high on the US dollar during the COVID crash of 28.90. Guess where we hit today? 28.90. We have come down about 8 cents from that high, but still, we're going on a parabolic rally. So for comparison here, global markets are just as concerned now as they were during the COVID crash. Isn't that crazy? Isn't that just wild? And we're not even fully pricing in that 1% rate hike yet. It's only about a 7.5% probability. So depending on where this shit goes from here, well, things are going to get a little bit dicey here in the markets in a very short amount of time. So as far as AMC stock is concerned, well, I think it's pretty bullish. I think it's safe to say we're pretty bullish on a technical basis, as well as given that tweet that was put out last Thursday. Well, people have a very good reason to be quite optimistic for AMC earnings. A lot of people are still going out to theaters. We know that is the case. We know that is not going to stop. So one, you don't want to bet against the American consumer going out to do things. That part's a fact. Right now, the money is switching from goods to services, and AMC in that service sector probably going to be very, very good. We'll see if they post a profit and all that. And you guys already know the tweet. Adam Aaron basically teasing at a dividend, a gift card or NFT dividend, and basically saying, you know, he promised something like that would happen to try to crush the shorts, and the time is essentially coming now around August 4th and the earnings. So I personally think, if you guys have not seen my videos, well, I'm not going to get into that whole thing, but I do think we could have a lot of good things come out around earnings, not just one specific thing, but multiple things. Now, we do have bank earnings that really kicks off on Thursday and Friday. We do have that other economic data as well. We will touch on in the video coming out at 4. If you guys have not seen the other videos, that is, like I said, very unfortunate, but we do have a lot of economic data that might start to price in this 1% rate hike even more. If we get good CPI and we get I should say bad CPI, and we get good retail sales, well, boom, there you have it. We're probably going to get a 1% rate hike that will be fully priced into the markets. Right now, it's only 7.6% probability, so keep that in mind. That is something you guys want to watch. Investing.com/Fed Rate Monitor tool. Now, on another note, guess what just came out? EU to cut economic growth outlook, sees higher inflation. No shit, if Russia does not turn on that Nord Stream 1 in 10 days, well, things are going to get very bad in Europe very, very quickly. Now, a New York Fed survey says more than half of American consumers say their household financial condition has worsened in the last year, and nearly half expect it to worsen in the coming year, so not good. And U.S. consumers on average see 40.4% probability of higher unemployment rate in a year, highest since April of 2020. So bad consumer data. People are not, so bullish about the economy. Obviously, look at your 401k, look at your home values. I actually just got an email from, believe it or not, Credit Karma saying that my home equity dropped 20%, which obviously it did not that quickly. But yeah, it's all these things. They're not going to add up to people being bullish about the economy or bullish about stocks in general. Could help to see some more downside. Now, for AMC stock, I am very encouraged by what I am seeing, specifically with the cost to borrow rates. Cost to borrow max now at 34%. That is about a 100% uptick from what we seen on Friday. Friday was sitting at 15.66%. Cost to borrow max now at 34%. That is an over 100% move to the upside since Friday. Cost to borrow average at 12.78%. Cost to borrow minimum at 11.38%. So all of these have come up quite a bit, but cost to borrow max definitely stealing the shine here. And what that is basically people are pricing a bigger potential move to come. Right? If you're somebody lending out shares and you thought a big move was going to come, well, you're going to want a higher cost to borrow rate. So keep that in mind. I think that is very paramount to watch and see what this cost to borrow max does heading throughout the next couple of weeks, getting close to that earnings around August 4th. Now, the estimated short interest of free flow is 18.05%. Free flow out on loan, 27.86%. Shares out on loan, 143.63 million. Days to cover, 3.51. Cost to borrow, 13.36%. 100% share utilization. If you guys have not seen the other videos where I talk about why the short interest is likely estimated to be falling, it's because we've seen a lot of shares out on loan that were out on loan from Q1, Q2 that are likely being returned as Q3 started, as people look at their portfolios and say, hey, we got these shares out on loan, but we don't want to short AMC stock right now. It just doesn't make sense. So what hedge funds have been doing is returning shares that were out on loan, that were not sold short yet, and that is affecting the estimated short interest. Ortex is just seeing these shares being returned, and they're saying, hey, these were covered, these were returned, these were covered, these were returned, whereas in all reality, they were just being returned. Shorts were not actually covering. No price, the chart does not indicate shorts were covering. No, that tweet was FOMO for Thursday and Friday. That wasn't shorts covering. Not at all, especially not in the way that Ortex is estimating short interest going from over 22% down to 18%. That simply put did not happen. You did not see over 4% of the shorts cover in the last week. Now, as far as option activity for the day, you're looking at about 36% positive order value, 6 orders totaling 432.69 thousand. Now, coincidentally or not, about an hour ago when AMC was positive, you did see these 2 orders for January 20th, 2023 come in, $15 puts for $130,000 a piece. That did drive the stock down in and of itself from being positive back down to negative. You're not seeing a lot of shorts taking on these massive put positions today. You did see these 2 positions, but they're not carrying through. They're not really trying to drive the price of AMC stock down to a large degree, but they are somewhat. You still have, out of the total option activity for this expiration for this Friday, which is a big one, open interest of the call side at 72.5%, puts at 27.5%. So overwhelmingly high majority of options are bullish for this expiration. Now, for the calls that are currently in the money for this Friday, 48,000 calls that are out of the money at 508,000, puts that are in the money of 81,000. All in all, that's almost 60 million shares that would have to be bought by the market makers if you've seen all the calls go into the money, all the puts go into the money. Obviously, that is not going to happen, but a lot of the option activity is focused in between the $15 and the $20 strike, really on the call side as well. You have over 46,000 calls that are currently held in open interest around that $20 price, and over 25,000 at the $15 price. So if we can break out above 15, if we do get that technical breakout, then that is going to be a very good thing, and that could really propel us to 20. And if we hit 20, I mean, that could send us to 30, 35, possibly even $40 per share. Very low volume day, volume only at 15 million. We are only about 2 hours into the trading day, so we'll see how that does end up developing, but it does look to be a pretty low volume day so far. Like I said, very interesting point on a technical basis. We want to break out above 15, and then we want to break out above 1573, which is the 100-day moving average. All things look very bullish to me. Like I said in the price prediction video that was put out yesterday, it would not surprise me to come up, retest 15 for a couple days, and then finally break out above that, because this does look eerily familiar to what we've seen back here in March. And I shouldn't say eerily like it's a bad thing, because it was actually a very good thing. We broke out above this orange line, which is the 50-day moving average, right? Came up, retested the $20 level a couple days, and then finally broke out in a big way with a 45% gainer once we did break out above that resistance level, which looks to be what is happening right now. So we'll see what happens. Definitely big catalyst. Meat and bones are going to be around earnings, where I do think you could get multiple catalysts, some form of dividend update to the popcorn, crypto, credit card businesses, and as well as that, likely stakes and acquisitions in other companies. Overall, a lot to be bullish about. I hope you guys are bullish as well. If you are, hit that like button and subscribe to the channel, because it is free 99. Thank you guys for doing that. If you want to come trade with me live in real time, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.